The best predictor of success, innate ability to allocate time properly. Keith Rabois. Keith hits the nail on the head, making sure that you allocate the time you need for the things that are important to you. 10 to 15 minutes a day is what you need to allocate if you want to learn how to chart stocks. If you want to gain this ability, it's 10 to 15 minutes every day the market is open, not an hour a week, not once a day, 3 days a week, every single day, 10 to 15 minutes. What do you get from that? You get the ability over time to learn how to read stock charts. And what's that like? Well, it could be a roadmap for riches in your future if you just spend the time doing it. Let's jump into these charts. How good is that weekly vertical crossover looking to you now? The one from back on the 8th. Had some doubts about it myself, but I kept the faith, stayed in, and of course, paying off handsomely so far. With the announcement that came on the news, apparently that drove markets crazy. And again, did I pay attention to what was coming off on the news? No. I simply watched the forerunner, which was the weekly vertical crossover. Somehow, it's like the market, it just has this foreknowledge, isn't it? That's what they say about Wall Street. You buy on the rumor, you sell on the news. The market knows what's going on. We tell you to just pay attention. Just pay attention to price movement. Just pay attention to these charts. Up, things pounding up for the day. We ended the day up 3.01% for the S&P 500. We have a green open box square, no wick on the bottom, which is good. Little wick on top. Nice size green rectangle that's forming for the candle body for the week so far, pushing above a higher high than the prior week. Nice to see. We see things moving in the right direction. Price percent oscillator moving up at a higher rate. Derivative oscillator gaining upward momentum. Go to the 2-day chart. Same thing there as far as derivative oscillators, about flat. Price percent oscillator heading up. And when we look at the 2-day candle, it's the first day of the latest one. Nice big green up candle hitting a higher high. Quite beautiful all the way up to the 50-period moving average line. We'll wait for that candle to finish drawing on Tuesday. 4-hour chart crossed over in the afternoon, moving up. That is nice to see. Also price popping above that 2-day trend line, which is beautiful. So that trade with a little shakiness over the course of this last week, doing well for us. I admit freely, I had my doubts. You know where I had even bigger doubts though? Was 2 weeks before with the crossover on the 1st of May going up on the Qs. And look at how beautiful it is. Again, Qs up for the day, almost 2%. Price percent oscillator gaining upward, moving up, derivative oscillator gaining upward momentum. Nice big green up candle forming. As we look at the first day of this weekly candle, we go to the 2-day. And of course, it was flat. It's now heading up more. Just a little less than flat. A little more than flat is what I'd say. And what do we see? A green up candle reaching a higher high. That's nice. Price is well above the weekly and now moved back above that 2-day trend line right there on it. And derivative oscillator is still losing momentum. Go to the 4-hour chart. What do we see there? We see up in the morning about the same, maybe a touch higher in the afternoon, crossing over, going up on the 4-hour. That's nice to see too, and price moving above the 2-day trend line on the 4-hour chart. So again, beautiful day for markets. Beautiful. Now, does that mean that our concerns about the market are over? Does that mean that we're not going to have things hammer back down in the bull trap? Of course it doesn't. Of course it doesn't. This all just plays into it. But you know what? We're happy. We're happy to make money in our practice trades, up or down. Why? Because we stay liquid and we follow the charts. Okay? That's the key. Is that getting through? We have an idea where things are going to go in the future, but in the meantime, We let the charts lead us. We don't sit there and talk ourselves out of things because we know more. No, nobody knows more than price movement ever. Now let's go to TLT. Those of you who were smart enough to go ahead, reduce your order size as we teach. And in fact, I have that teaching back in the training today. Back in the training today, we have for you using order size to control risk. Remember, in volatile markets, when you start worrying about things, if your average order size for your practice trade is $100,000, and you feel that there's more risk in it, then you lower the order size to 50 instead of reducing your percentage of your loss limit. In fact, you could increase the percentage of your loss limit because you're reducing your order size to deal with the volatility, the unexpected nature. Well, those of you who jumped into a down practice trade, even though it was right there on it, chances of it bouncing off, it did bounce off back in October, September of this last year. We had it come and then bounce up and then back down again, but it really stayed where that crossover was occurring. But again, you can have bounce offs like we had. I'm looking back on the charts, back on the week ending the 10th of May 2019. Looked like it was going to cross over, going down. Derivative oscillator did cross over and then bounced off. That could have happened. And again, if that had happened, you would have pulled the trade and gotten out. But what did it do? Instead, it crossed over. So this will be the week. If we end up the week, we will just have the weekly vertical crossover when it's actually confirmed. Those of you who wanted to jump in early, I said nothing wrong with that. Just make sure that you allocate for that risk because it is nothing like the guarantee that you get most of the time with a weekly vertical crossover. So again, means you got in early, got a chance to make some more money. But my friends, there's always plenty. There's almost always plenty. So don't get greedy and beat yourself up and keep trying to grab every dollar like some grasping man on his last breath. You know what happens when you're greedy? You get slaughtered. So be smart, not greedy. So what do we see? We do see TLT down for the day, 2.20%. Now, those of you who are newbies and you don't know what I'm talking about, why the hell would anybody buy TLT when it's going down, 20-year bonds? Because there is an inverse fund called TBF, Tango Bravo Foxtrot. It's the inverse, and it actually goes up when TLT goes down. It's priced differently, but it's set for the percentage to change similar. In fact, I'm going to put our training on inverse funds at the end of today's video. Those you're listening to YouTube, go to the video at chartingwealth.com's channel on YouTube, and you'll see it at the end of the channel. The other training I talked about on order size and adjusting that to fit risk, that is in the show notes for subscribers. You're not a subscriber, go become one for free. So that's where we are on the weekly on TLT. Go to the 2-day. We can see it spiking over on the price percent oscillator, derivative oscillator gaining downward momentum, red down candle forming. It's nice to see. And then we go to the 4-hour chart. Down in the morning, further down in the afternoon, crossing over, going down in the afternoon. That's nice to see. That's where we are. That's what bonds ought to be doing, going down when stocks are surging. Gold, likewise, should be going down. It is down 0.76%. Now, as far as the weekly goes, it is showing us a green up candle. That is showing us average pace positioning on our Heiken Ashi candlesticks. We see the derivative oscillator gaining upward momentum, price percent oscillator flattening. We go to the 2-day chart. What do we see there? Again, drawing a 2-day candle showing us as far as price comparison between the prior week and this week. Derivative oscillator heading down, price percent oscillator negative, losing downward momentum. Oh, come on. Price percent oscillator is heading down, pulling away from the red signal line. Derivative oscillator losing downward momentum. We see that the candle that's forming is weaker than the prior because we can see that we're not hitting a higher high, not pushing up to our weekly trend line at this point, smaller box forming. So we'll continue to watch what happens with gold. That 2-day just won't recross yet. What's happening to the 4-hour chart? Red spinning top in the morning, down candle in the afternoon, pushing through the weekly trend line. So we'll continue to watch, see what's going to happen in gold, but again, weakening for the day. Folks, that's where we are on this exciting Monday. Great way to start the week with real movement, one way or the other. We don't care as long as we can chart it. And we have been doing so. And successfully, quite successfully. So now let's leave our 4 big charts. We're going to go next to Bitcoin. We're going to go to real estate, and we're going to go to oil, all of which were up. 2 up significantly, 1 quite significantly. We'll get to those in a minute. Those of you interested in it, great. Those of you just care about those first 4, you are done. God bless you. Thanks. If you don't have a copy of our latest edition, second edition of our book, Charting Your Way to Wealth, updated for you during the coronavirus crisis or pandemic, whatever you want to call it. We have a copy for you, autographed, ready to go. If you live overseas, want to buy it, just email us, cw@chartingwealth.com. We will send you a PayPal invoice. Pay it. I'll send it to you wherever you are in the world. Postage paid. If you live in the States, follow the link in the show notes. We'll also send you your book, postage paid, autographed. Now, let's jump into the rest of these charts. First, Bitcoin up 1.42% for the day. And look at Bitcoin continuing to move on after that weekly vertical crossover. Back on the 8th, we had sort of a slow week over the week ending the 15th. Whenever we give you dates as far as weeks, it's always a Friday because that's when the candle officially is drawn. You never have a candle until it is fully drawn. And weekly candles are fully drawn at the close of the market on Friday. So we saw sort of a weak week on the 15th. This week starting off better, still not reaching a higher high than the week back on the 8th. But we'll continue to watch, see what we see there. Price percent oscillators heading up, derivative oscillator gaining upward momentum. Those are good signs. 2-day chart, again, about where it was in the prior and still not as high as the 2-day chart back on the 11th, just the first day of this latest 2-day candle. Price percent oscillator heading up, derivative oscillator losing upward momentum. 4-hour chart slipping sideways, trying to get a little bit of momentum, still flat as far as the price percent oscillator goes, derivative oscillator losing downward momentum. So at least that's a decent sign. We'll see just how that 4-hour chart is going to go, when that's going to flip over for you. But that's where we are as far as Bitcoin goes. Again, not a bad day, 1.42%. I mean, as we're looking at some of these other crazy things, it doesn't seem like a big deal, but that's decent. So we leave Bitcoin, we go to real estate, booming up 5.92%. Guess why? Because everybody's back to work. The shutdown for 10 weeks didn't take anything out of the economy. No productivity at all. Everything's fine. Go back to your, these aren't the droids you're looking for. Go back to work. No. But for the day, up. Look at the price percent oscillator on the weekly chart. Actually, instead of heading down, it actually kicked up a little bit. Derivative oscillator gaining upward momentum. What do we have so far this week? Basically a little bitty green spinning top, almost a doji. Hard for a lot to happen to really get that market up. But again, 5.92% is nice. See a green up candle forming. First day of the latest one. Derivative oscillator lost a little bit of downward momentum. And look at that price percent oscillator bouncing off the red signal line. That's good. Gives you a little bit of hope. 4-hour chart had been heading down, boomed up in the morning, and then crossed over going up in the afternoon. What's happening, though, in the end with real estate? Maybe it's going to find a bottom, but I have a feeling that bottom may not last. But again, that's just a feeling, and feelings don't count in what we do. Price movement does, and only price movement. Keep telling yourself that. You will talk yourself out of more good trades than you can imagine if you pay attention to what you think. You pay attention to what the charts tell you, what the math is. Now, let's go lastly to oil. Oil booming up 8.58% for the day. What did it do to the price percent oscillator? Still heading down. Derivative oscillator still losing downward momentum since it's peaked all the way back on the week ending March the 27th. We have a green, just a green candle with a little bitty wick on top, a small candle forming on that weekly chart, first day of the latest weekly candle. 2-day chart, a little bit bigger green candle with a wick on top. Derivative oscillator gaining upward momentum. Do have a crossover going up. That is the first time in a long time that we've seen a crossover on the 2-day chart on oil. That's nice to see. And that's where we are first day of this latest 2-day candle. Now, it's not a confirmed crossover until that candle finishes drawing on Tuesday. And we see a booming up movement in the morning, a little bit of slowdown in the afternoon. Price percent oscillator heading up, derivative oscillator slamming up. But again, we'll continue to watch, see what there is to see. One day of excitement doesn't, of course, mean that price percent oscillator is still heading down on gold, still negative, but heading up on real estate. And of course, continuing to move up on Bitcoin, recovering. Gosh, nicely. Look at that. Bitcoin started at 10,323. That's where it started before the financial crisis hit. And Bitcoin has recovered quite a bit of that up to a high $9,712.10. Not bad, Bitcoin. Not bad. That's where we are, folks, as we end the day. Thank you again so much for being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters.